Hello and welcome back to another video. My name's Jared and today we're going to talk about how to judge an income statement and what we look for in an income statement and earnings to be able to make sure we're doing our own research on the stocks. And this is exactly what we're talking about when we say do your own research. If you get any kind of knowledge out of this video, if you enjoy the video, if you enjoy the setup, hit the like button, share with a friend. Anything that you can do helps me out a lot. We're going to get into it, and today we're going to take a look at Amazon. And the main evaluations that we want to make and we want to look at when it comes to a income statement is going to be earnings per share, their growth, their revenue growth, profit, growth in all sectors that they are participating in, spending, operating income, debt, and future guidance. All of these boxes need to be checked to be a great income statement. And future guidance isn't on the income statement, but it actually is brought up when they're doing their earnings report. And it is super important to pay attention to. That's kind of what's been going on in the market is the future guidances have just been kind of crazy when it comes to the CapEx spending, and it's kind of making people fearful, especially when it comes to the AI, right? So we're going to take a look. First thing we're going to take a look at is actually going to be the future guidance, and they're expecting net sales to be up and grow 11 to 15%. They're expecting operating income to be between 16.5 billion and 21.5 billion compared to 18.4 billion. That's all good. That part is great. We'd like a company that's going to be up in the double-digit percentages when it comes to their net sales and growth. That's fantastic. However, this is where Amazon took a little bit of a dive on Friday. Investors were focused on the company's CapEx spending forecasted of 200 billion plus for the year when they thought it was going to be 146.11 billion. And right there, it says it. We're going to invest aggressively here. We're going to invest to be the leader in this space. When he's talking about that, he's talking about their AI, which everybody's spending in it. That's fantastic. I'm great to see that they're wanting to be a leader in it, especially if it is going to take off. I think there's definitely room for AI in the future. And if they're going to be ahead of the curve on it, what's not to love, right? Outside of how much they're actually spending. So you can see here on Friday is they were down $12.37 or 5.55%. They actually did come down to almost $200, just shy of hitting that $200 range. Here's a look at the chart. They came down in the last week from 246 all the way down to that 200, and they stabilized at 210 right above this resistance line, which is a great thing for them. Staying above that resistance line and closing above it actually is going to be good news. Hopefully that shows a good sign of strength and some upside potential in the near future. I'm thinking that Amazon's still going to be a buy for me for my own portfolio. Please do your own research, and that's what this video is all about. So we went through these first couple. I like Fidelity. When we go to Fidelity and we're looking for the income statement, sadly, you don't necessarily go to the dividends and earnings. You can see that they actually did miss on the quarter, and they had decent growth year to year, and growth same quarter to last quarter was up. You go over here to statistics, and you got their PE, you got their growth, last 5 years, EPS growth, gross margins, all the other stuff that we would want to take a look at there. But we come down to financial statements. You just click on more right here and you are in. So this is their balance sheet, income statement, cash flow. This is exactly why I like Fidelity, is because they break it down between the three. Now, you may not be able to get this right away. It may take the next day for it to come out, sadly. So you may be looking at Amazon's actual income statement if you want to try to be ahead of the curve. But this is what I use to look at previous income statements to make a strong putting in if I'm going to buy a company or if I'm going to skip out and move on to the next. If I find something that may not check one of those boxes, I'll dig a little deeper into the reason why, and then I'm going to move on to another company if I find something that I just can't get over. So we're going to take a look at the quarterly. You can swap it over to annual. Here in Q4, you can see it is going to be in the millions, USD million. So their cash is up. Their current assets are up. That's great to see. I like seeing that the cash and the short-term investments are up. Their inventory is actually down quarter to quarter, which is fine. They're a big inventory company. They're constantly selling goods online, right? That's what we're all buying. That's what we all use Amazon for the most part. They do have their music and their Prime and their videos and stuff like that, which is always going to be a good thing as well, that they're expanded a little bit more than just one thing very well. Their asset totals is up, which is great to see. Their liabilities is down pretty significantly. It's going to be, this is the reason right here, their current liabilities. They paid that off. That's fantastic to see. They do still have accounts payable. They do owe people more money than they did last quarter, and they don't have any debt in those current liabilities, which is great to see. Long-term debt did go up, which that's okay. We want to just make sure that it stays manageable. You can see they slowly increase quarter to quarter. This last quarter, they did have a little bit more of a jump, and that would be from their long-term liabilities, long-term debt, and their long-term liabilities and shareholders' equity is up. It's up pretty significant when you add in the shareholders' equity, but you have 50, I guess it'd be 50 billion from that with the millions. Once again, this is all in millions, right? So we're going to move on to their income statement. This is exactly the whole purpose of the video, is to see what they actually have going on when it comes to their money. This is opening up their books, and that's what they're showing us. We want to look mostly at the, net income. The net income is up, but it actually does break it down for you. So non-operating income is down significantly from the previous quarter. But you can see that previous quarter is actually more of an oddity than this quarter. That's what I was talking about. So if you see that massive of a jump, you might want to take a look as to why. Their selling is up, gross profit is up, cost of goods sold is up, which, you don't really necessarily want up, but in reality it is, and their sales is up pretty good. They don't have any dividends. They're not a dividend paying company, which is absolutely fine. And their net income up is slightly. Once again, their earnings per share stayed the same, which means that they actually had a miss on that last earnings. Earnings per share with their operations diluted was down. That is how they missed. Let's get into their cash flow. Cash flow was not on the list, but is super important because it explains their debt, how much money they're keeping on the side, how much cash they have on hand for future investments, things along those lines. So you had their income here. That's great. They increase their inventory. They did not increase as much as the previous 2 quarters, but still over double from the quarter prior. So 1 year ago, they actually increased by just under double. And their operating inventory, their net cash flow is up pretty significantly. But you can see compared quarter to quarter of 1 year ago, it is up. That's where we want to compare because it's Amazon. You got Christmas in there, right? That's going to be a huge time of the year for them. And then we're going to keep moving on. Their capital expenditures are up. Their investing activities, negative cash flow, it is up pretty good. But in their future guidance, they're going to be increasing their investing even further, especially when it comes to AI infrastructure, things along those lines. They want to be the leader in that section, right? So they're going to be throwing a lot more money at it. It'll be very, very interesting to see where their next income statement actually lies and see where that money's going and see where they actually put it and see how long it's also going to take for a ROI. Now, their cash and cash equivalents is up. The last few quarters, they were negative. You can see it's actually down from a year ago, which is not the best thing to see. But once again, they are investing more money. With all that being said, earnings per share was up. Their revenue growth was up. Their profit was up. Growth in each sector. They have their international market that was up. Their United States market that was up. Their spending is also up, which isn't necessarily a great thing. But if they're getting a return on it, that's fantastic. That's what we want. We want to see them expanding as well as growing. Their operating income was fantastic. Their debt went up a little bit, but they paid down some liabilities, which was awesome. And their future guidance was a little scary because of their CapEx spending. That's just the way that it is. Now, what are they expanding into is the AI field. So they could actually lower some of their costs by expanding into the AI and utilizing that for future income and future growth and lower their expenses, which is actually going to be exciting to see. So that's what we're looking for when we take a look at their income statement, their balance sheet, their cash flow statement, everything that is there. If you're looking for a company that checks all those boxes, has great future guidance, those are going to be the kind of companies we're looking for the next 1 to 3 years. I think Amazon hits all these except for that future guidance, which once again is a little scary, but the whole market went crazy. The tech bubble, and now tech is spending a lot of money. Where I'm going to be curious about it is where that money is going to, and that's also where I want to be looking to invest. The next income statement and balance sheet is actually going to show where some of that money went to, which is going to be fantastic for us to take a look at. Hopefully this video kind of helped and explained what you're looking at when it comes to some of these sheets. The cash flow, the income statement, and the balance sheet, they're all super important to look into before you actually start investing on your own. And this is what we're talking about when we say do your own research. So if you enjoyed the video or you got anything from the video, please smash the like button, share with a friend, share with a colleague. It helps out wonders. And I will see you in the next one.